So, many of you may have seen in the Daily Telegraph a couple of weeks ago that our dear friends Ryanair had a bit of a problem where it was alleged that some $5 million via a Chinese bank was attacked through their account. Now, obviously, that's quite a big company, but it doesn't only sit with the bigger companies. And I'm quite pleased that Paul's going to have a look at how it affects the smaller businesses. So, as I say, our guest speaker is Paul Cullum. He is the Project Development Manager of HSB Engineering. He's got over 25 years' experience within the engineering sector, and of course, he's also CII qualified. So, Paul's going to give us a very good presentation, and if you can hold your questions till after, we'll be grateful. Paul, thank you.
Okay, thank you very much. Cyber solutions for SME customers. Hopefully we will be doing what this is saying on the tin today. What we won't be talking about in any great detail is things like the cyber data breach for Sony, state-sponsored cyber terrorism, the traders event in the US. They've all been done to death. I mean, there's not a week goes by when there's not a cyber presentation somewhere here in the market, and everyone's talking about this because it's very much the topic of the moment. What we're going to be talking today about is real-life events affecting SME customers from experience that we have around the globe, and particularly in the USA, where this has been more prevalent for quite some time. So, yeah, we're going to be talking about the everyday, almost the mundane. In the vernacular of Lloyd's of London, we're going to be keeping it real. In terms of HSB, who are we? Well, nothing to do with the bank. We are part of Munich Re. We're a specialist engineering insurer, specialising in both primary and reinsurance across a wide range of engineering topics, everything from electronic and computer equipment up to the latest renewable technologies and energy efficiency insurances and stuff like that. We're a very old company. HSB was formed in 1866 in Hartford, Connecticut. In fact, Samuel Colt was one of our original founding members. And we're part of the Munich Re. So we're very large. The global turnover for HSB is about $1 billion. And we basically provide a lot of services based on a strong technical base. We have a lot of engineers around the world. So I stand here a living embodiment of the brand, really. Old, large, and technical. Okay. In terms of the agenda today, we're going to be looking at what is cyber risk, particularly with reference to SME customers. And also, what has our experience been from the USA, where we've been writing cyber coverages for smaller customers for some years now. We'll then be looking at how we can produce a bottom-up approach for cyber, because I think so far the approach has been predominantly top-down, corporate risks downwards, before we bring everything up to date with a summary and an open forum at the end. And I think I'm obliged to say that we have a learning objective today, because this will give you your CPD points. So by the end, and I shall read this word for word, by the end of the briefing, delegates will be able to identify how cyber risks could affect SME customers, how they can protect against such risks, and what insurance solutions are available. So there you go. You can claim your CPD points now at the end. So what is cyber risk? Well, first of all, cyber is probably not a terribly good name for cyber risks. Cyber just means anything to do with computers, really. It doesn't have any special or particular meaning. E-risk could be used. Digital risk is probably a good name for it. But I think we're stuck with cyber risk now. It seems to be what the market has decided is going to be the generic term for all things to do with computer and electronics. I think it's fair to say that cyber risk means many things to many people. Everybody seems to have their own particular view of it. There are plenty of cyber risk products entering the market now, and they're all have their own unique take on what risk is and how it should be dealt with. So there's not a lot of commonality across the cyber market at the moment. It's still very much a developing market. Is it a first-party cover? Is it a third-party cover? Is it a bit of both? A lot of it depends on the focus and the angle of the underwriters who develop insurances for cyber risks. Some obviously come from a very much a liability background and think of this as a predominantly third-party and liability issues. Others from a more property background will look at the first-party stuff and emphasise that. The reality is, as we'll see, cyber risks is a mix of many different exposures that all come together under this overall umbrella of cyber. In terms of the market itself, we're seeing a lot of capacity coming into the market, probably more capacity than there is demand now, to be fair. So that's creating a lot of competition, but most of that seems to be occurring very much at the top end of the scale with corporate customers. So what we're going to be looking at is probably an underserved part of the market, which is the SME side. To give you a flavour of the potential for cyber, here in Europe, the penetration of cyber insurance into the market is far lower than it is in North America, where data breach legislation has been in place for some years now. In the US, we're seeing sort of 25% plus market penetration of cyber insurance now across the market. It's no more than probably a fifth of that here in Europe. So there's a lot of room to improve on this side of the pond. And generally, there seems to be just a lack of clarity of what's needed and an understanding of what cyber risk is, particularly at the SME end of the market. So let's have a look at things that are actually driving demand for cyber insurance. The first thing is publicity, and the example of the Ryanair case is a perfectly pertinent one. We see a lot of headlines in the newspapers about major events, and this will be the only time we mention Sony and traders, I think. So we're seeing things like those great big events where we're told about hundreds of millions of dollars of loss for various data breach incidents, and we're told about state-sponsored cyber attacks, North Korea attacking Japanese interests like Sony, the USA attacking Iran and stopping their nuclear program. It's, you know, we get a lot of information, which makes the whole thing sound like a bit of a cyber Armageddon at the moment. The reality can be a little bit less exciting than that, but no less relevant. I'm throwing some figures up here from various sources. I don't know how meaningful they are, to be honest. It's one of these things, it's the ministry of made-up numbers, isn't it? We hear lots of things about different percentages of people who are being affected, and, we're all getting attacked by cyber terrorists or people sat in bedrooms in the Ukraine, and all these things are going on. But the reality is, life is going on. Things are happening, and that's causing inconvenience for people. So our focus today is going to be looking at the real-life incidents that happen at the lower end of the market. The other thing driving demand for cyber is legislation. Now, I think it's fair to say that in Europe we are a little bit behind compared to North America. We've been talking about introducing European-wide data breach legislation for years now. It's one of those things that's always 2 years away, no matter what time you ask the question. So, and strangely enough, the latest estimate is it's about 2 years away. So the word is that they're looking to ratify European-wide legislation by the end of this year. Originally it was going to be, I think it was going to be this month actually, but we're now looking end of the year. And once that's ratified, there is an 18-month period to implement that in the different member states. So we're looking really at the earliest, kind of mid-2017, by the time everyone's likely to be up to speed with the European legislation. So, but anyway, the clock is ticking, and that's going to drive demand as we go forward. Under the new legislation, regulators are going to have quite a bit of bite. Notification of data breaches to customers and to regulators will be compulsory, and fines could be anything up to, depending on which version you believe, 2 to 5% of global turnover. That's global turnover, not just the turnover in the country where you happen to have committed the incident. We're seeing a lot of other things, a lot of test cases and legal precedents going on at the moment, because this is an area that's still being very much tested. The right to be forgotten, probably most of you have heard of that, under European law now you have a right to be forgotten on the internet, and that has implications for people holding data and records. We've more recently in this country had the Google versus Vidal Hall case. Who's heard of that? You seen that in any publicity around that? It's quite an interesting case because it changes the landscape somewhat for cyber liability. Previously, in order to claim damages for distress, you had to first prove that you had a financial loss as a result of that data breach. This case actually turns that around. In this particular case, a number of defendants had set their Safari web tools on their Apple devices to no cookies or whatever. And so basically they were supposed to be anonymous online. But it turned out that Google had a way of getting around this and collecting data even for people who say they don't want any of their data to be collected. And so they sued Google under privacy issues, under breach of privacy. And the Court of Appeal has decided that you can actually claim for damages for distress even if you've suffered no identifiable financial loss. So that's quite interesting. What are other drivers? Social media. Well, we do keep inventing new ways of getting ourselves into trouble, and social media is certainly a very good example of that. These are a couple of my favourite quotes about social media, so I'll leave you to read those and make your own mind up about those. But we're seeing all different ways now of upsetting people, libeling people. It's amazing how many ways we can do it now. An example, a French couple who had a fairly poor meal and decided to write on it on TripAdvisor or some similar type website, and left people on no uncertainty as to how much they didn't enjoy the meal. They were then sued by the restaurant for loss of earnings because of a bad review, which they said was malicious and untrue. And they won, and the couple concerned had to pay €1,500 to the restaurant for sending a bad review. And that's a fairly trivial example. But another larger and one that we probably all have heard of is the McAlpine Twitter storm. If you remember, about 18 months or so, 2 years ago, there was a very serious allegation levelled against Lord McAlpine revolving around child abuse, which turned out to be completely untrue. Now, this allegation was tweeted. That tweet was forwarded by lots of Twitter users. Lord McAlpine sued everybody, everybody who had forwarded that tweet. And that was something like 10,000 people had been judged to have libelled Lord McAlpine. And he went after all of them to make a point. So it's not, you don't just have to be the instigator of a libel to be liable. You can simply just forward an allegation that turns out to be untrue and get into a lot of trouble. He actually, in the end, decided that anybody who had less than 500 followers on Twitter was considered sort of, fairly by the way, and he basically asked them to make a £25 donation to children in need, and he wouldn't take it any further. Those that had more than 500 were expected to pay a lot more. And I think the high-profile case was probably Sally Burko, who was made an example of somewhat, and eventually came to an agreement outside of court. But again, all the money went to charity. It wasn't about the money; it was about the principle of the thing. So there's another example of social media, and most corporations, even SMEs, we all have Facebook accounts now corporately, LinkedIn accounts, Twitter accounts. If they're not controlled, they can get you into a lot of trouble. So in terms of cyber exposures, as I said, cyber means a lot of different things to different people. But exposure comes in a number of different areas, both first and third party. So we're going to go through these individually, just a quick slide on each, and then maybe look at some practical examples from our SME book that we have written in the US, because obviously that's much more established, and we have a lot of examples over there. So we'll be looking at risk to hardware, looking at data corruption issues, how you can be exposed to cyber crime in a number of different ways, different cyber liability risks, issues around data breach, particularly with the incoming legislation, and finally, loss of income as a result of cyber incidents as well. Right, first of all, hardware. This is something that's been insurable for some considerable time, both on a standard property insurance basis and on specialist computer insurance policies, so I won't drag this out too long. But basically, yeah, there's always the risk in terms of damage to hardware, to portable media, to various bits of interlinked office equipment, whether that's just through its own failure or through a hacking attack, which can cause hardware damage in certain circumstances. And there's always been an ongoing sort of tussle between whether this is just general property insurance or is it specialist computer insurance. And the reality is the market treats it as a bit of both. As a specialist engineering insurer, of course, I'm always going to say that a specialist computer insurance is always the way to go, broader coverage, breakdown insurance, things like that. But a lot of it has been commoditized and placed on the property market. So there's always been this ongoing tussle between the property insurance and the specialist computer insurance market. I think cyber really changes things and changes the focus. In terms of data corruption, well, the cost of reinstating data is something that's been insurable under both computer and some property insurances for quite some time. But it's easy to underestimate the potential cost of reinstating data following a corruption incident, whether that's caused by hardware damage or through external sources of hacking and denial of service attacks, whether that's caused by just accidental erasure. How much of that occurs accidentally with staff getting things a bit wrong and wiping records that they shouldn't. And then we have the issues of cloud storage. Cloud storage introduces a whole new level of risk and takes that apart from our physical location. And that's something that modern policies mostly aren't up to date with. Most policies are not cloud compliant. There are still computer insurance policies being sold today and out there in the market which are saying that in order to protect your data you need to back it up onto a floppy disk, put that in a fireproof safe and do that. It's like the cloud had never been invented. Things have moved on and policies and wordings need to take that into consideration. And in terms of the cost, well, there's the physical cost of recompiling, and whether that's just a case of going back to some older records and updating, or whether it's about carrying out research and development that's been lost. But there's also a lot of investigation costs involved in that as well as a first-party risk. The cost of getting in IT specialists and forensic experts to find out what's caused damage and caused corruption so that it doesn't happen again. And the cost of actually reconfiguring your computer system after damage. This brings us to our first sort of example from our US book. If you're going to have sensitive data or if you're going to store data, be careful when you sack a member of staff. This revolved around an IT member of staff who was let go, shall we say, by a customer. Unfortunately, they didn't change any access. They didn't change any passwords. And guess what? Shortly afterwards, the system started becoming very erratic. Programs were no longer available that should have been. Data started going missing. So that required a lot of remedial action. They had to get IT experts in to restore the data and get all the recreation in, reset the passwords. And the cost of that, reinstating data for a relatively small, I think it was a financial services company, an independent one, was nearly $34,000. So one simple mistake, not changing a password when a member of staff left, cost them $34,000. Cybercrime. Well, we've heard about Ryanair, and it just goes to show that even the most customer-focused of organisations can actually suffer from cyber loss. Cybercrime comes in many different forms. You've got the obvious ones, the debiting of accounts like Ryanair, money transfers to Chinese banks in this case, establishing credit. A lot of obvious first-party losses can occur on that side. But there are also some ones you don't necessarily think about. Telephone hacking. Most office telephone systems run on the net now. And that provides quite an easy route for criminal gangs to hack into a system and start ringing up premium numbers in far-flung countries that ring up thousands of pounds worth of bills before you even know anything's happened. And we've actually seen about half a dozen such incidents, even here in the UK, of customers who have had their telephone systems hacked, the numbers permanently dialed into a premium rate number, and before you know it, you're £6,000 down. Cyber extortion is quite an interesting issue. They're always tricky when we start talking about extortion and ransom payments and things like that. Do you actually go that far? Do you just cover the incidental costs around cyber extortion? But it's becoming increasingly common now. People will create some kind of denial of service attack or will hack into records and then basically try and extort money out of you, not to make that public, because now it's obviously not exactly good for reputation, for people to know your system's being hacked, or that your system can be taken down by denial of service at will by someone. So there's a lot of costs around that in terms of getting forensic investigation in place to sort out the hacking attack, the denial of service attack, to correct the system and make sure that you are now safe and secure from that extortion threat, and also do investigation around who's actually been doing it and getting after them. I've got an example, and I haven't got a slide for this because it's kind of an ongoing case. It's from the UK, actually, from a lawyer contact of ours. A small company managing director was emailed at 2 o'clock in the morning, a very strange email that came from their own internal email system. This email had a link to 3 documents online with the password, which was very kindly provided, which was spelt out, Simon is SH1T, which is a nice touch. And when he used the password and got into there, he found a number of client records. Simon, by the way, was the IT manager, apparently. He found a number of client records. He found some downloads from their IT system, and very helpfully, a copy of their data protection policy. And along with that came a little note that suggested that if he wanted to make some kind of contribution, then none of this would be made public. Well, a lot of legal costs later and undercover police operation, the culprit was tracked down to within the company, and it was one of his employees actually trying to extort money from him. And that's ongoing at the moment. Somebody has actually been arrested from that company. But, there's an example of cybercrime being very, very close to home. You find that this is going to be a recurring theme, actually, probably through this. It's a bit like, say, murder. You're most likely to be murdered by someone quite close to you, someone you know. Well, your cyber risks are probably likely to come from someone you know and is quite close to you. Cyber liability. Well, obviously, the main cover is likely to be damages and defence costs for a breach of your duty to store people's data under the data privacy obligations. But also it can come from things like the transmission of a virus, the negligent transmission of a virus to a third party that causes them damage. Libel and slander. We talked about the McAlpine Twitter case. Libeling someone online is likely to get you into hot water these days, particularly in the current climate. Equally, breaching intellectual property rights on your website or through social media, again, is an issue we need to consider. Fines and penalties. Should coverage cover fines and penalties as well as pure damages and defence costs? Well, I guess the answer is yes, they could, where that's legally permissible, and that's not always the case. So cyber liability, a lot of people, when they think of cyber risks, think of cyber liability as being the sort of the primary exposure. As we'll see in a bit, that's not entirely true, but it certainly is a growing issue. And another example from our US book. This was a small independent property management company. Their email system became corrupted. Some sort of virus had infected it and was sending out emails to various customer contacts from the company email database. Shortly afterwards, they received a legal notice from one of their former customers claiming damages for loss of business and IT costs as a result of a virus infection that they had caught from an email that they had forwarded unwittingly. That was settled out of court for $48,000. So again, that's lawyers' costs and damages, not inconsiderable amount. The $200 was the first party damage, the first party cost, the actual cost of getting IT in to actually take the virus out of the email system. So a relatively simple job, a simple issue, ended up with quite a substantial claim. Data breach. I guess this is really the hot topic around cyber, and probably the thing that has driven demand most, certainly in our North American book, with legislation coming in force in the US. I think something like 48 states now have cyber breach legislation that requires compulsory notification to clients. And that's the framework that we're going to be getting here in Europe within the next couple of years. In terms of the costs, You're talking about forensic investigation costs. When a data breach occurs, you need to know why it's occurred and how you're going to stop it happening again. You've got the cost of actually notifying your customers, and that can be not inconsiderable, and keeping them up to date in terms of what the situation is around the data breach and how it might affect them. You also got potential credit monitoring for customers. If financial data has been leaked, then they may well have credit issues, and so you need to be able to offer credit monitoring services to your customers. And other things like customer helpline services, public relations and crisis management expenses. This can be very damaging to reputation, so you want to manage the PR aspect of it. And the cost? The estimates vary enormously. I've seen estimates that vary between $5 a customer and $100 a customer. As you'll see, we'll give some examples and we'll tot them up towards the end. It's, as all things are, it's somewhere in the middle in terms of an average cost. But it can vary a lot depending on the type of records you keep and the sensitivity of the data that you're keeping. Here's a very simple and very common example of a data breach. Most people will think about hacking and, I say someone in a dark room in the Ukraine getting into your system and stealing all your customer data. A lot of the time it's a lot more mundane than that. In this case, it was a doctor's surgery in the US who had 2 laptops stolen. Someone broke in, stole a couple of laptops. They had 10,000 customer records exposed as a result of that theft. Unfortunately, they hadn't thought to use any encryption on the system, so it was completely unprotected once those laptops were stolen. Considerable notification costs around that to their customers, and $50,000 was paid out on that particular incident, just for having 2 laptops stolen. So we go from a situation in a traditional computer insurance situation where you think, well, okay, 2 laptops, that's, $1,500, and maybe a bit of data reinstatement for the records you've lost, maybe $2,000 in total, to now looking at sort of $50,000 plus. Lastly, the last area of exposure for SME market is cyber BI. And here we're talking about loss of income following some form of cyber event. We're not looking at duplicating property covers or anything like that. We're looking at pure cyber issues. So we're talking about virus and hacking, dedicated denial of service attacks, data corruption, and maybe telecoms and internet utility failures and the like. And again, they can stack up pretty quickly, particularly those that are relying on online services and web sales. Losses will rack up very, very quickly. Here's one example of a marketing company that was insured by us in the US. Their website was basically hit by a dedicated denial of service attack by hackers. The website went down. It took quite extensive IT work to regain control of the website from the hackers and protect it from further attack. And as a result, whilst they were down, they suffered quite significant business loss. In total, $45,000 was paid out for that incident. So again, not an insignificant amount. So those are the exposures. The good news is there's quite a lot you can do to protect against those kind of exposures. And there's a lot of advice out there. I mean, here in the UK, Department of Trade have produced their Cyber Essentials Guide, and that's a really good place to start. Some fairly solid advice. I've heard some people criticise it for being a bit basic, but frankly, most of the claims we see are fairly basic. A bit of basic cyber security and basic safeguarding would mitigate a lot of these claims. So it's not a bad place to start. There's also the 10 Steps to Cybersecurity, which has been produced in conjunction with GCHQ, and I'll leave you to sort out the irony of that. But there's a lot of advice out there, and relatively simple things can mitigate cyber losses, particularly at the SME end of the spectrum. Only actually keep the data that you need. If you don't need the data, don't store it, or if you archive things securely in an encrypted way, so that you're only managing and handling data that's essential at any time. Safeguarding data. Restrict access to data to those members of staff that need to. If a member of staff leaves, make sure their access is turned off, is denied. Destroy equipment before you dispose of it. Simple thing, disks, flash drives, hard disks on computers. Make sure they are properly destroyed before any equipment is disposed of. We don't want people accidentally picking this stuff up. Update your procedures. Review your procedures and update them regularly. Look at industry standards, the standards for whatever industry you're in, or maybe look at the Cyber Essentials guides and other best practice examples that are out there in order to review your systems. Educate your employees. Employees, as you'll see from a lot of the examples we'll be giving today, they really are the weak link in a lot of this around cyber security. So make sure you have a written cyber policy. Make sure that that is communicated to your staff and updated regularly. In terms of control of computer usage, only allow computer usage at work that is work-related. Don't allow access to sharing websites and stuff like that. We all have other devices that can do that. Lock down your system as much as you can. Secure your computers. Put passwords on them for access. So we don't have an issue like that doctor where once the laptops were stolen, access was free and easy to the data that was on them. Put timeouts onto them so that if they're left at a desk and attended for more than a minute or two, they blank out and require a password to switch on. Basic things like this. Update your security software. Make sure you have some security software. That would be a good start. And make sure it's up to date and your licenses are all up to date. And lastly, encryption. If you're transmitting data, encrypt it, because there's many a slip between cup and lip and all that, but basically during transfer is when your data is very, very vulnerable. If it's encrypted, particularly if you do it to double encryption to bank standards, then it's almost impossible in practical terms for that to be hacked. So these are really basic things, basic solutions to mitigate cyber loss. But again, it's amazing, how many times these things fall down, and when they do, that's when cyber losses tend to happen. So that's had a run through sort of cyber risks with an SME focus. We're just going to take a look at our experience in North America. We've been writing data breach and cyber insurance aimed specifically at the SME market for several years now, and as a result, we've built up quite a significant experience. I'll reverse this round. In the UK, until recently, our focus has been very much, as you'd expect for the UK engineering market, around computer insurance. So we've been providing first-party hardware, reinstatement of data and increased cost of working covers, and a bit of virus and hacking, so loss of records, corruption of data as a result of virus and hacking, a traditional computer insurance model. And I think that's true of many sort of specialist providers here in the UK. In the meantime, in the US, driven largely by legislation and state legislation, we've been providing a lot of embedded covers. So we've been providing embedded solutions for client companies, enabling them to provide data breach and cyber liability covers as a standard part of their offering, as a reinsurance service. We call those data compromise, very imaginatively, Cyber One, which includes an element of cyber liability and data reinstatement costs, and identity recovery, which is something we embed into more personal lines products, so enables people to recover costs if their identity is stolen online. So we have quite a bit of experience and have done this for some considerable time, and as a result, we see a lot of different and varied losses. We've also done a lot of research in the US as well on cybercrime, and we've done that in conjunction with the renowned Ponemon Institute, looking at cyber risks in the US. The findings of the last piece of research, which was in 2012, was that nearly a third of US business had suffered a cyber attack that year. And every time these surveys are done, that percentage increases, by the way. The latest stat I saw for a piece of British research had that at 60%. So these things vary, but it gives you an idea that this is a significant problem and it's growing. Of those people who suffered a cyber attack, 72% said that they were unable to fully restore their data. So they lost something and they incurred cost and inconvenience in terms of recreating that. In terms of what was causing those cyber attacks, well, general viruses, generic viruses, worms and Trojans, were responsible for 61% of those incidents, and another 22% were unspecified malware attacks. So, you know, clearly viruses are having an effect, and they're causing inconvenience, if not always massive financial loss for customers. But we see claims from a lot of different areas. And here's another smattering of claims examples from our US book. And you can see that the types of people being affected are varied. The reasons for loss are relatively varied. Take the first one, a petrol station where a rogue member of staff was skimming customer cards, did about 550 of them. There you go, nearly $20,000 loss. An accountancy firm, another stolen laptop. There's almost a theme occurring here, isn't there, really? 800 tax records, $28,000 loss. A small investment advisor, 2,000 records stolen, $70,000 loss for contacting customers. This is one of my favourites, actually. A rental agent, a small independent rental agent, had 2,600 customer records stolen. They weren't even on a computer. They were printed off and they were in a box. But that's still data, and it's still a data breach. It doesn't have to be electronic. You know, data is data. And so that was a $91,000 loss. Haulage company, I mean, it goes on and on. You know, hacked by a former employee, that's another example of that. A retailer being infected by a virus, very similar to our marketing company that we looked at earlier, $22,000 loss. An equipment dealer, another email virus. Actually, that's the example we used, 48,200. So we're seeing a real wide variety of different companies being affected in a number of ways by cyber, but there are patterns that emerge out of that. The other thing to say is it's easy to think of these amounts as being relatively trivial. When we hear about $5,000 losses for Ryanair, or we hear about hundreds of millions of dollars for Sony or traders and people like that, it's easy to think of these as being trivial amounts. But they're not trivial. Not to an SME customer. If you're an independent rental agent, $91,000 is a lot of money. That is not trivial. And so, you know, these are real exposures for real companies, and these are real incidents that are happening. So that's the message I wanted to get across there. And also, in terms of the patterns that are emerging, well, first of all, data breach is by far and away the most common cause of loss in our US book, far more than liability or data reinstatement. So, and that's driven a lot by the legislation now because it's compulsory. You have a data breach, you have to notify, and that generates cost and incurs cost. So data breach is definitely a major incident, and once we see legislation on the horizon, that's going to be a big driver for cyber sales. The other thing to say is that over half of these incidents are in some way connected to human failing. They're not hackers from abroad. They're not, North Koreans having a state-sponsored cyber attack against you. It's about people misplacing laptops, losing memory sticks. It's about employees getting a bit disgruntled and hacking your system, or ex-employees causing havoc. It's a lot of these are people-centric claims. And actually, I've seen a similar piece of research in the UK recently, which suggested that 51% of all data breaches and cyber losses were being caused by the human element. So don't underestimate the importance of that. It's very easy to think, well, I've got a firewall and that's protecting me from the hackers abroad, and it goes a lot deeper than that, and a lot closer to home. So the other thing, I guess, the other pattern that emerges out of that is you'll notice that professions tend to be a bit careless. Whilst they are not necessarily the largest chunk of our client demographic, they do produce more than their fair share of claims. So, accountants, doctors, estate agents, people like that, do seem to produce more than their fair share of losses, so beware the professions. And I guess that's also an indication of the fact that they tend to have more sensitive data. So, a bottom-up approach to cyber. Hopefully, that's given you an idea of the nature of cyber risk at the SME end of the market and what we have to deal with. But how can we approach this from an insurance point of view? Well, I think the first point to make is that at the moment it's very much a top-down approach that the market seems to be taking. There are lots of cyber products out there, and most of them are aimed at the corporate market and maybe pushing down from there slightly. The comment I've made, and I still think it's true, is that it's actually probably easier to buy $20 million worth of cyber liability cover here in the London market than it is for an SME customer to get 100 grand's worth of affordable cyber cover. So, you know, there's very much a top-heavy approach to the market, and not that many people. I think the SME is probably very much an underserved area of cyber risks. In order to focus on cyber at the SME end of the market, you need to do three things. You need to write realistic sums insured, $50 million, probably going to be out of the price range. You need to also then deliver that in an affordable way at an affordable price. But also you have to provide access to some kind of assistance. SME customers are unlikely to have expertise in data recreation, in cyber disaster recovery. This is going to be quite alien to them, so they're going to need some help. Underwriting considerations, aggregation is always an issue. But then, you know, cyber virus cover is nothing new. It's been available in the market for some time and is relatively well modelled. But even so, yeah, virus aggregation across a book is always going to be a significant concern when writing an SME cyber book. Business continuity planning, the availability of virus defences and firewalls for customers is obviously a key underwriting issue. But also, the sensitivity and the nature of the data that a customer type is actually keeping is of key concern. And for that, we split that into 5 tiers of cyber risk. Tier 1 is business to business. It doesn't tend to be that sensitive. It tends to be just general commercial data rather than personal and sensitive data. So manufacturers, wholesalers, people like that. Tier 2 would be business to consumer. Now we're talking about private individual records, so we're talking about an increased level of sensitivity. Retailers, service providers, customer names and addresses and credit card numbers and the like. Third, and we've seen quite a lot of examples of this, is the professions. So doctors, accountants, lawyers, obviously contain or possess an awful lot of very sensitive data potentially. So a different level of risk entirely. And then you get up to tiers 4 and 5, you're looking at healthcare, education, the public sector, very, very high volumes of very sensitive data. Probably not really talking about the SME end of the market now when we get into those areas. So the sensitivity and nature of a portfolio is very relevant when assessing cyber exposure. In terms of how we can approach it in insurance, well, 2 ways really. The first is to write this as a standalone product for the SME market, either in its own right or perhaps on the back of a computer insurance policy, enhancing that to cover cyber-type risks. Probably written on a modular approach, so we can look at the different exposures, cybercrime, data breach, cyber liability, perhaps a pick and mix for people so they can choose the covers that suit their needs the best and at limits that they want. Probably providing that at relatively modest limits as a base level, as an entry level, with an option to write to higher limits with more underwriting information. And key to this, and this came out of a lot of qualitative research that we did here in the UK, is that backing that up with some support services, and we'll talk about those in a little bit detail in a second. These are SME customers. Dealing with a data breach is not really a core competence for them, so they're going to need their hand-holding through that process. The other way of being able to do it is to embed covers into a portfolio on a portfolio basis. So introducing that as a standard coverage or a coverage section within a commercial combined policy, say, and providing bespoke coverage depending on the nature of that portfolio. I would say that the base coverage that you're looking for, particularly with the introduction of legislation, is undoubtedly data breach, and our American experience suggests that is, in terms of frequency of loss, the greatest exposure. And then backing that up with some cyber liability and then possibly some cyber crime and data reinstatement insurance as well. The best way of embedding that and doing that in a cost-effective way is probably to do it in some form of high attachment strategy. So whether that's just a standard coverage that's given as a standard cover extension, maybe for a modest limit, or maybe on some sort of auto quote system, or basically the higher the attachment strategy, the cheaper the unit price, you can flush that through a portfolio. And in terms of the embedded solution, with or without support services, I would say almost certainly with support services, as we've identified. Just giving people insurance and saying, well, you know, get on with it, you're on your own, is probably not the right approach. These people are going to need their hands holding. Which brings us on to the insurance as a service, or the service element of cyber. The services, well, we're looking at things like IT forensic investigation services for data recovery and for data breach investigation, legal support, PR and crisis management, you know, very important. It's easy to underestimate the effect on business confidence that one of these incidents can have. Customer notifications, you know, actually getting some assistance in getting information out to your customer base. So things like call centres and the like, and access to credit monitoring for your customer base as well. And even perhaps maybe providing as part of a package some kind of secure data storage or secure cloud storage or something like that to help people secure their data. But basically, the importance around that is that you need to have a provider who has the local knowledge. So regarding on territory, and this is something obviously which is going to be European-wide, you need someone who's focused on the local legislative framework. And you need access to those special teams. You also need to carry out a lot of due diligence to make sure you're employing the right people. If you're getting support from those people, you need to make sure that they have the relevant competence. So, coming near to the end now, I think our time's just about up in the last couple of slides. So, in terms of the benefits of a bottom-up approach to cyber, as I say, it's probably not really the market norm at the moment, so it's an underserved area of the market. In terms of actual end users, customers themselves, well, it's very much the topic of the moment. Most SME companies are aware of cyber risks in the broadest sense, but not necessarily what solutions they need. They don't necessarily have that expertise, and it's up to us as an insurance market to provide some good quality solutions for them. It's basically, actually these slides are the wrong way around, aren't they? These 2 points. But in terms of customers, it gives them access to cyber risks at an affordable price, with realistic limits, and also gives them that access to support services that they need, because that, obviously, as we pointed out, that's an area that they don't have the necessary expertise. In terms of insurers and MGAs, and these 2 bullets are the wrong way around, it gives you potentially a solution to a customer base for what is very much the topic of the moment. And that can provide a lot of competitive advantage and customer retention around versus products that don't have that cyber edge to them. So, in summary, what have we learned? What is our learning outcome for your CPD points? EU legislation will undoubtedly drive demand for cyber insurance here in the UK, but there's not necessarily a need to wait for the legislation. A lot of these exposures we see are very valid for the SME market and not reliant on legislation. Cyber crime, data corruption, cyber liability, none of these are reliant on legislation. Data breach largely will be, but the rest aren't. Data breach will likely be a main focus of that because that's what the legislation will hone in on. The other thing I guess to bring to mind is the fact that these are not trivial losses. They may look trivial compared to some of the large cases we hear about in the press. But to an SME customer, £50,000, £100,000 losses are not trivial. Also, we can mitigate against these losses. SME customers, with the right simple defences, can mitigate against a lot of the issues. We've learned that probably over half of losses are down to human error, simple human error, and staff issues, most of which, if the right processes and procedures are in place, can be avoided. Also, if we're going to provide anything, we need to make sure that those support services are in place for the SME market. They don't have that in-house expertise. So, and I guess the bottom line is that the SME market is probably very much an underserved part of the industry. But there are solutions that exist out there, both on a transactional and embedded basis as well. So I guess that kind of brings me to the end in terms of summing up on that. And can we now throw things open for questions from the floor?
Thanks very much indeed, Paul. That's excellent. Quite interesting your comment about GCHQ. Just before the election, I was at the House of Commons, and there was a guy there from GCHQ who said basically there are two types of firms out there, those that have been hacked and those that don't realise it yet. I felt like saying probably from you, but it's a very, very valid point. So the floor is now open for your questions, please. Can you wait for the mic? Sorry, so we could podcast. Thank you.
Can you tell me what risks insurers won't cover? What cyber risks they won't cover?
It will vary from insurer to insurer, but there tends to be variants of approach around things like fines and penalties and how far they will go with those. Research and development costs on data reinstatement costs are usually a no-no for most insurers, although we're starting to see some movement around that. Deliberate acts, obviously, as you would expect, are still not being covered by anybody. But I think generally we are seeing, a very much a broadening of an approach to this. Reputational damage used to be a bit of a no-no, but there are solutions in that, and our mothership at Munich Re have now started sort of providing some coverages on that side of things as well. So it's a fast-developing area, and I think I don't think anything is kind of off the table these days. We're seeing things broadening quite rapidly.
Thank you. Any more questions from the floor? Yes, one over this side.
Yeah, the question is legislation. What is the American legislation that makes the drive for the demand?
It's at the moment it's state-based, so there are 48 different pieces of legislation, and they all vary slightly, but they all take a very common form, and that's a compulsory need to notify the legislature in that state, and also to notify customers. And that seems to be the route that we're taking in Europe. We seem to be following a very similar route, with the exception that the European legislation looks like it will have bigger teeth than they do in the US. The fines over there, whilst not insignificant, tend to be a bit of a slap on the wrist compared to the sort of 5% of global turnover and a maximum of €1 million or whatever. So that would be the main difference. But yeah, I think it's now 48 states out of 50 now have state legislation, and even in the US there is now a move to go towards national legislation rather than leaving it at state level. So it may well be that we leapfrog the US in the short term, but I think they'll catch up again pretty quickly.
Thank you. Any more from the floor? All right, thank you for that. I don't know if anybody has seen this. Our friends have brought this particular document along, which is the Topics Risk Solutions. It's available from Munich Re or the HSB Engineering's website, or you can have a chat with, give your card to Michelle or to Paul, and they'll make sure you get it.
That's in case you do want to read about the traders' risk, because it's that's a high-level one. So if you want a detailed investigation into the traders' risk, then the traders' incident then is in there.
But before I go on, would you please join me in thanking Paul for an excellent presentation? A couple of quick points, if I may. Evaluation forms, please, if you can fill those in, we'd be very grateful. We have a couple of sessions coming up on the 1st, 2nd of June. We have our forums that, as you know, are only open to MGA members, and then we have another session here on the 3rd of June with SSP talking about IT systems there. We also have our one-day conference on the 1st of July. If you have not done so, will you please register with Teresa so we can make sure that you are included. I also have a great pleasure. Many of us were at the BIBA conference last week, which was excellent for us, and we always have a free draw for an MGA to get a 3 years membership, and the winner this year is Hyperion. So we're quite pleased that a relatively new MGA, and they're joining our ranks, which is excellent. Again, there will be teas and coffees outside for a little bit of networking. Our friends from HSB will hang around. I think there are some sandwiches, and thanks, Paul, again for actually sorting the lunch out. It's much appreciated. So thank you for your time, and thank you guys from HSB Munich Re.